Hello there, this is James, and you're watching the latest episode of Primus Live, which will be starting literally in about 4 minutes. It's a very special episode. I'm very excited, and I hope you are too, and I'll see you very, very soon. Hello there, this is James, and you are watching the Primus Live webinar series. Now, today is a very, very special episode, and it's in fact the last episode of 2020. Now, before I introduce you to my very special co-host, one of my very special co-hosts, remember these little episodes are for educational purposes only, and in no way whatsoever should be taken as advice. I always suggest you do your own research and do your due diligence and know the risks at hand before entering any trade. Now, let me introduce you to my very first special co-host, which, to be honest, she doesn't really need an introduction because everybody knows how amazing it is. She is, sorry. And of course, this is Kaya, who is our head of investment research at FX Primus. She's worked as a portfolio and investment manager with exposure to both public and private markets. Before FX Primus was lucky to get her, she was a senior investment associate at a hedge fund in Singapore and a vice president at Bank of America, Merrill Lynch. Just welcome, as always, Kaya. Kaya, I think you're muted, actually.
Is it better, James? How are you doing?
I can hear you. How are you doing, my darling?
I'm doing great. Merry Christmas, first of all. And it's a bit of a different scene for me today. So those who are watching us earlier, this is my house. I'm doing a live from home this time. So welcome to my humble living room.
Brilliant. Looking ravishing as usual, by the way, just so you know. But yeah, have you had a good Christmas so far? Christmas has been good?
I had a good Christmas. I was very fortunate I was able to travel home. So I got to experience real Christmas from the perspective of weather. It was minus 10 degrees. It was snowing, which was quite nice. But now back to Cyprus and doing my quarantine.
There we go. Well, back to this sort of sunny island, so to speak. Now, this is a special episode because we actually have a fellow co-host. And let me introduce this very special person who sort of specializes in commodities and currencies. He is Mohammed Riyadi Balan, and he's a former helicopter pilot. After he left the aviation history in 2014, he then joined investment banking industry and worked for one of the largest banks in Malaysia. He has extensive knowledge in money markets, stocks, and forex trading, and his trading style and approach are based on price action trading. Riyadi's, that's how he prefers to be called, because I call him the currency commodity Jedi. Riyadi's last position was a proprietary forex trader before FX Primus was lucky to grab him. Riyadi, how are you, my friend?
I'm doing good, James, and how are you guys? Merry Christmas.
Thank you very much, buddy. Thank you. I appreciate that. And welcome. This is the first appearance on Primus Live, and I hope it's going to be one of many. So it's really great to see you and have you on board today. Now, this is the last episode of 2020, and indeed, it's a very special episode because we're obviously going to talk about what's happened this year and obviously what's happened in relation to the market. So, Kaya, do you want to take it away?
Sure. So as you've mentioned, it's a special episode for a few reasons. First of all, we have Riyadi on live today. Second, it's the first time we have a ex-helicopter pilot on live. So yeah, definitely an interesting one. And thirdly, we want to sort of revise what happened in 2020. It was a very eventful year, a lot of things happening. And I think when I was preparing the slides for this particular live, going through the January events was already surprising. Like, was this year? Because I thought these things happened like maybe 5 years ago. So yeah, definitely interesting presentation we have prepared for you today. We have a couple of surprises coming up later, so please stay for the entire live. But with no further ado, we're going to start with our sort of brief summary of 2020. So quite a few market moving events we had during the first quarter. So January was the month when we started seeing coronavirus cases popping up globally. China reported their first case 31st of December 2019, but by January, the virus had spread to Taiwan, Thailand, and Singapore. January was an interesting month because everybody thought we're going to have World War III since President Trump ordered an assassination of the Iranian general. And finally, in January, we had the UK leaving the EU. That was sort of finalized that month. I see James is shaking his head already. February was, I guess, slightly more quiet because the main event was the impeachment trial. Donald Trump was acquitted. And then we started seeing the first coronavirus cases in the US. By March, we had pandemic, as per WHO, we had 118,000 reported cases and 4,000 deaths. So we're going to continue seeing the progression of that data throughout the year, which is actually absolutely astonishing, given the number of cases we have by December. by March, the world had gone into the Great Lockdown. This is a term coined by Ed Yardeni. So basically, most major economies were completely in a standstill. And we had the first day in US stock markets since 1987. So if you guys remember, during the month of March, I think S&P was down 33%, which was finishing again. 23rd of March was the day when Treasury Treasury and the Fed said, okay, we're going to start doing something. So a record amount of stimulus was pushed into the markets and into the economy, and we saw the rates dropping to zero in most developed markets again.
That was the beginning, wasn't it? Really, that month.
I think 23rd of March. For some reason I recall that day. I was literally sitting again. Not here. I was sitting in Singapore at the time. The world was coming to an end. That was one of those days where you're like, wow, what am I supposed to do going forward now? Those who were sort of, I would say, a bit more ballsy, I should say. Those were the ones who actually started buying in March. And quite a few pension funds actually made very aggressive repositioning into equities. And we're going to touch that topic a bit later when we talk about US credit market as well. That was the month when US credit markets completely froze because everybody wanted to go into equities by the end of March. Okay, let's look at the next 3 months. So by April, we had 1 million cases worldwide. Everybody had gotten used to that new normal, which was basically wearing a face mask, having social distancing, having restrictions on the number of people that could gather in one place. And in April, we had the absolutely shocking data point coming out from the US, which was 18 million jobs lost as sort of measured by non-farm payrolls.
I see. I remember that in particular. This was during we were locked down over here, so we were by this point. This was my second month in to be locked down, and I obviously had Bloomberg in the background because I was working from home. And though you could sense that the NFP coming up was going to be really, really bad, because up to that point, initial claims had started to skyrocket. With huge numbers of initial claims was going in week by week. So you had a feeling that this NFP was going to be something quite shocking. And when it was announced, I remember the presenters on Bloomberg was like ashen faced. They were completely shocked by how dramatic this number was. And, for once, the NFP, it was quite interesting in a bad way, obviously. But I remember that very, very clearly being in quite a shock about that.
Yeah, we discussed that, James. I recall with you during one of our lives. I think that the previous record must have been around 200,000 as the highest. And then suddenly you had a spike to 18 million jobs lost, which was just astonishing. And I think when the first print was released, there were queries sent back saying, are you sure that you didn't add a couple of zeros just, in error? And that sort of shows how much, what was the sort of meaning of that particular data point.
Yeah, absolutely. May, things didn't really get much better. We had another major issue, didn't we? No, didn't get better.
In May, it was again, I think from economic data perspective, normally the summer months tend to slow down quite a bit. So May already is quite slow because Europeans go on holiday, Americans go on holiday. But then it was the George Floyd incident. One person was basically killed by police, and that triggered mass protests in the US in all major cities, and that continued to June. But the lockdowns were slightly eased. So US opened up New York City. Europe started easing the lockdowns, which clearly has impact on the coronavirus cases during the second half of the year. So by the month of July, once the slides are going to updating, we had 10 million cases. And that 10 million cases, unfortunately, are the direct impact of those lockdowns being eased and also having those mass protests pretty much everywhere in the world. July was also the month when Donald Trump wears a mask for the first time.
Finally. Thank you for the encouragement. Exactly. Thank you for the encouragement and motivation, Mr. Trump, for making us all wear masks.
And leadership.
Exactly. And leadership, yes, indeed. And then obviously August was horrendous explosion. Say it again. Explosion in Beirut.
Correct.
I actually remember I was walking. I've left the office because obviously we're in Cyprus. I left the office and I was walking down the road by the coast road around the time of the explosion, and I actually heard this huge bang, and I was thinking nobody started running in the streets. It was just like everybody sort of paused for a moment to work out what that really loud bang was. And bear in mind, we're in Limassol, quite a bit of distance away from obviously Beirut. And then as we sat down trying to Google what that was, the news came in, it was from Beirut. And the fact that we could hear it and sort of feel the vibrations over here, how horrendous this explosion was. So I think that was really another major shocking event.
The video was shocking of the explosion, I have to say. Almost seemed like surreal and sort of whatever computer generated, but actually legit explosion. And this part of the city in Beirut still hasn't been fully recovered. I mean, it was in the harbor, but all the neighboring the blocks are just completely destroyed. So definitely market moving event as well, because stock markets had I think 7% drop on that day. In August, we also saw massive wildfires in the east coast of US. So that was predominantly in California. And by September, the wildfires...
Can I just, sorry, Kai, sorry to interrupt. Riyadi, can I just, because obviously I know you're a gold and commodities guru. Correct me if I'm wrong. Wasn't it August with the back of the explosion and the wildfires? That's where we saw gold breach the $2,000 mark. It was around that period, wasn't it?
Hold on, let me check. Back in August, for gold in commodity prices, back in August, July.
You're
August.
Right.
Yes. Sorry, the price of gold, it's already spiked to 2,000 mark, and then it came down in August as well. But I will explain it further later on why this happened.
But I'm pretty sure, because I remember obviously on August explosion, that's when obviously, as Kaya knows, I am a gold bug. Anyway, sorry, Kaya, please carry on to September.
No problem. So by September, the wildfires had gotten slightly better, but coronavirus had again exponentially grown. So by September, we had 30 million cases worldwide. One of the Chief Justices, Ruth Ginsburg, had passed away in September. So those who were involved with the presidential elections can remember that caused a bit of stir between the Republicans and the Democrats in order to wait with the new appointment of the justice. But, Democrats were basically overruled. And September, we had the first presidential debate, which was slightly amusing, I would say. One of my favorite pastime activities in September was watching presidential debates.
Yeah, but it was quite entertaining. It was more like a car. It was like a car crash, though, wasn't it? At the same time, it was really. But yeah, that was something else. Yes.
Moving on to October. So President Trump tests positive for coronavirus. Actually, not very little market movement from there, but I just think it's important to note that the most protected person in the world was exposed to the virus. So none of us is safe, I suppose. And presidential election was in full swing in October. So two debates were cancelled. One was done as a town hall. The other debate was done sort of in remote manner, I would say. And we had the vice presidential debate, which was also quite amusing. But I have to say, out of all the debates and all the sort of presidential events we had, I found the vice presidential debate the most interesting. And, sort of like reminding at least what the normal debate should look like.
Yeah. Well, what sort of politicians should be talking about instead of calling each other names and things like that? Wasn't it the vice presidential debate, the one where they were focused on a fly sort of being on Pence's head for quite a period of time, and they were like,
the fly is still internet celebrity, James, by the way.
There you go. You say, there you go, upstaged by a fly. And then November, we
had an outcome for the election. So Joe Biden won with 306 electoral votes. And we started getting announcements about the vaccine. So we have discussed the very important date of 9th of November multiple times during our lives. That was the day when a lot of the equity sectors just jumped, especially those that are more defensive. And we saw US stock markets recording the best months ever in the history. That was both for Russell and, if I'm not mistaken, also S&P. So definitely risk on, very bullish momentum happening in the markets in November.
Yes.
And by December, vaccination had kicked off in quite a number of countries. So the EU has started, UK has started, US has started, Israel, China started already earlier with their own vaccine, and so did Russia. And as of yesterday, we have 81 million cases worldwide. We have 1.8 million deaths. But on a positive note, we have Brexit agreement signed, and we have new stimulus bill out of the US signed. And we already see effects of those in the markets as well.
Yeah, absolutely. Actually, the stimulus bill was signed at the last moment, wasn't it, though? Just before they went
at the very last moment.
Another government lockdown.
But the same for Brexit, let's be honest. I mean, the deadline was 31st of December. We got the bill last week. So unfortunately, or fortunately, the way democracy works is that you have too many opinions, and nothing ever gets done until the last minute, 11th hour.
So it was Christmas Eve, wasn't it, when it was finally announced, like a little Christmas present for the markets. But I'm pretty sure they timed it just right, because they knew the markets were going to be closed as well. So I think, maybe a little bit of clever timing with that. So that's been 2020. With that's 2 days to go.
Exactly. I mean, 12 years of surprises, I would say. Every month, 12 months of surprises, every month something major happening. So I'm very happy that 2020 is coming to an end, meaning that 2021 we have maybe new sort of winds blowing, and hopefully we can sort of get back to normalcy with the vaccination starting.
Fingers crossed. Fingers crossed. Riadi, now I understand, my friend, you wish to share some things with us, some sort of overviews in the market, which you've been looking at, and a bit of commentary on that. Would you be so kind to share that with us?
Oh, yeah, sure. So we'll be looking at the commodities market, such as gold first.
He's so engrossed, he's paused.
He's paused. In that case, I'm gonna take over, and you know what we're gonna do? We're gonna go through some of the market moves, the ones we normally look at. So
why not?
If our production manager is kind enough to show my charts, let's go through S&P 500. So S&P 500, as we've discussed so many times, is the best indicator of the major US companies, those that have massive market capitalization, and it's those companies that generally tend to be internationally operating. So S&P 500 chart is still extremely bullish. If you can see, the 2 days here are post-stimulus signing days. We can see another record high. We can see today the price sort of pushing through the resistance at the upper Bollinger of the upper Bollinger Band level here. And what's super interesting is that the RSI is 65 at the moment. Slow stochastic is 75, meaning we are not at overbought levels yet. So I would say there's still a bit of energy in that bullish momentum. However, if I look at the ADX here, ADX is currently at 17. So the strength is getting slightly weaker, but bullish trend definitely dominating. Russell 2000, another of my favorite, which is a good indicator of the real economy, meaning those are those 2,000 companies in the US that don't have international exposure and don't have access to the global markets as such. Again, very bullish movement, very bullish chart with all the moving averages stacked in a rainbow fashion. There's no resistance, which is important for technical traders, meaning that there's nothing that's going to stop the price. Now, RSI has been overbought since early December, but again, that's not that uncommon for a strong bull market. And slow stochastic has been overbought since early November. I would say very, very bullish momentum, a lot of energy in that, because our ADX is currently at 49.5. Wow. And DMI plus dominating with 39 versus DMI minus at 10. So if you are a technical trader and you look moving averages, you look at RSI, look at stochastics, look at DMI, I have a feeling a lot of the technical traders are currently long.
Yeah, very much so. We got Riyadi back now. Now, obviously, Kaya, you're our equities guru, and Riyadi is our currency and commodity guru. What are you looking at? What have you been monitoring recently, my friend? What do you have the comment about?
Okay, so spending back to 2013, we have seen a gold price has been traded in a sideways movement. So whenever the price has break out from this zone and the trend has changed from the sideways to uptrend movement. So back in 2019, it's already start to move up again to the uptrend movement. And then we have a COVID-19 outbreak back in March 2020, and the gold price just spiked up until recently it has goes down back again. But I think this is because of if you can see on the long-term chart, weekly, which is on a weekly chart, I think it tries to form a chart pattern such as a cup and handle, which is it is trying to form right now. And I think 2021 gold price, the gold pattern has already given us a hint that something might be going to happen in 2021.
Well, don't give the game away. We're saving that back, what we think about 2021 in a little while. So don't worry. We're going to give our expectations and our Jedi foresight into what we think will happen. What other sort of commodity? Or is there any other particular asset you're looking at the moment?
All right. So such as oil price, I think is a very shock when the COVID-19 outbreak happening back in early of January or March. The oil price has tanked down to negative territory, but it recovered very well until today. I think it will probably goes to $60 per barrel back very soon.
What's your timeline for that, Riyadi? Just what do you think is the date for the 60 price point?
60 price point, I think it's gonna be somewhere around in January.
Okay, so quite soon then.
Oil was an interesting one because you could definitely see the reinflation trade happening the moment you started having announcement about vaccines. Again, 9th of November was the interesting date. If you have the daily chart available as well, it's just very, very obvious when the market sort of changed their perspective about oil, inflation, and also the recovery. Lovely chart there.
Yeah, if you can see that the oil price has tanked down to the negative territory and then recovered it back. Same goes to the indices such as S&P 500 and also Dow Jones. But the thing is, it is in a slow growth currently because of no demand in the oil industry. But I think the price is still in the outward momentum.
So for the oil price, we should definitely watch what China is doing because they are still the number one consumer of oil in the world. So any positive data point coming out of China, let's say in terms of PMIs or whatever industrial activity, will definitely give a boost to oil as well. So at this point, I think China will be the key catalyst for oil price as well.
Very much so. Very much so. Now, I have a couple of questions, actually, for both of you about 2020, your personal experiences, your personal opinions of 2020, and your opinions of what 2021 may present us. So starting off with ladies first, this is for Kaya. What, for you personally, has been the most shocking event to occur this year in the markets? We have had many, but what's your personal most shocking event you feel has happened in the markets this year?
There's too many to choose from, James, to start with. But I would point out the March event, which was sort of the crash of the markets. And the most astonishing event was the crash of US Treasuries market. So there was a week in March where there was no bid for US Treasuries, which is the most liquid and safest market in the world. It's about 18 trillion in terms of size. It's held by pension funds. It's held by other governments. Whichever institutional player out there definitely has some sort of exposure to US Treasuries. But what happened was that when the equity markets crashed, everybody wanted to reposition themselves. So they wanted to buy equities instead. There was a massive sell on US Treasuries. And that was actually one of those triggers why the Fed had to step in and they had to buy those. Otherwise, the yield would have spiked way too high. And I think it actually spiked to 1.27 from 0.8, which is huge for Treasuries again. So for me, the fact that the safest, most liquid market froze in March, definitely a shock.
Yeah. How about you, my friend? How about you, Riyadi? What would you say was probably the most event what shocked you the most this year in the markets?
Well, of course, the outbreak of the COVID-19 is one of it, and the secondary effect that has been caused by the COVID-19, which has caused most of the shop closing down and people has losing their jobs, and we have seen tremendous spiking of prices in commodities such as gold. But the most shocking event, I think, is the US oil. It has been tanked down to negative territory that has never been in the history before, I think.
Yeah.
James, what about you?
I would say I would agree with Riyadi. It was the oil going to miners. But I think what I remember the most would be again the NFP. The NFP number, I think, will stick in my head as an event I will remember, along with January the 15th, 2015, with the Swiss bank moving the peg. It will stick in my head. That sort of occasion. We didn't see a gigantic market collapse on the back of the NFP, but that event will definitely stick in my head, I think.
For sure, yeah. And just for the oil market, I'm just going to mention that clearly the price itself of oil spot wasn't negative, it was the futures, but nevertheless, it's still shocking. And it shows also how complex the financial markets have become, because it took a couple of days for actually market participants to understand why did we have negative price. And it was one particular futures contracts expiring on one particular day that there was just, again, no buyers for that. So, yeah.
That's it. Again, in a day, it's all about buyers and sellers. Don't forget that never changes. Right. What has now? This is going to be for Riyadi first. I'll switch it up a bit. What asset's performance has impressed you the most? So, what asset do you think has performed really well this year, which you're like, wow, I'm really impressed with? That was a great asset.
Okay, I'm stick with the gold prices that has been outperformed. I think other currencies or other asset classes. But let's go back to the indices also. After it has been wiped out since the Trump take over the Oval Office because of the trade war and also the COVID-19, but it also has recovered very well until today, and it also has created a new high until now.
Okay, same good answer. Same question to you, Kaya. What asset have you been like wowed with the most this year?
I wouldn't say an asset, but I look also at equity sectors, in particular those that have ETFs tagged to them. And I would say the ETFs that represent the work from home theme have been quite surprising. That would be your XLKs and SOXX, which is technology and semiconductors predominantly. Those were the fastest to recover after the March crash. And again, I think these are a good indicator to show how the fabric of our society is slightly changing. You know, we're all, I'm working from home, Riyadi is working from home, James are in the office, I see at the moment. But nevertheless, you know, the way we approach work and becoming location agnostic, I think that was very surprising for me, how fast people actually changed their entire sort of mentality. And that also reflected in the equity prices.
Yeah. How quickly we were able to adapt to certain things.
Yeah, and look at Apple, look at Amazon, These are just amazing, how fast they recovered. I think within a month they were back to their original levels, and now up 160%. So
yeah, it's impressive turnaround, definitely. Now, going back with you, Kayan, what assets did you choose to trade this year, and are you impressed with your choice?
I generally trade options on US equities, so single names, but also on ETFs for a couple of reasons. So first of all, you don't need too much cash sort of payment, I shall say, an overlay.
Yeah.
So I've traded those, and it's been interesting journey because you see a lot of retail coming into options. So
Yes.
I would say it has become very saturated market, and it has become quite expensive market at the same time. But it's been, definitely a journey.
Brilliant. And Riyadi, how about you, my friend? What's been your choice of asset to trade this year, and have you been happy with your choice?
Well, I think the asset that I've been traded for this year, I think Bitcoin is also a good asset classes to be looking at, because of it has recovered from a downside favored last time, from 3,000 back to 20,000 to 30,000 recently, and I think it's gonna be uh, what we call it, a good time to enter a cryptocurrencies market during this time, because of the prices is quite volatile movement to the upside right now.
Okay, so you've been trading.
Not a trading advice. Not a trading advice.
No, yeah. It's not trading advice, guys. This is only in the opinions. This should never be taken as advice. Now, moving to 2021, which we can't wait to the new year to get started. To be fair, we are still witnessing a bull run as the year ends out. Are you expecting this bull run to continue throughout next year?
I'll start. So again, depends what asset class, what currency you look at. So I would say the risk on bull run is going to continue, and that's going to be visible from US equities, most likely S&P 500. I think Russell 2000 is going to continue marching higher, at least medium term, which is maybe the next 3 to 6 months. I think Euro potentially could be getting higher at some point, even more. Already we are 2-year highs. And yeah, I think that's sort of the bull run for equities and Euro, for instance.
Okay. How about you, Riyadi? Do you consider the bull run which we're witnessing, and we've been witnessing for not just this year, for a good couple of years now, do you see it continuing throughout 2021 or beginning of 2021?
Well, for the equities market in US, I think it will continue to make a bull run, but in a slow pace. I think it is because of the all-time high all stocks in the US currently, and I've seen that it will have a pullback anytime soon.
Okay, I mean, like I say, it's been going on for a good couple of years now. This bull run. Eventually, something's going to have to hold it, or eventually, whatever rises, eventually has to drop.
What do you think, James? What's your projection for the bull run, and what equities? What asset classes?
Okay, well, look, I'm of the, again, opinion, not for trading advice whatsoever. But I am personally of the opinion that I think 2021 we will start off quite a difficult quarter. Okay, the reason why I think that is, I think the second outbreak of COVID is going to hit us hard, and I tend to think that we ain't going to see any sort of recovery till maybe in the summer. So I think we might see some sell-offs, and particularly at the beginning of quarter 1. I can see we're all struggling. We'll start to struggle again, and maybe not till the spring, May, will we start seeing recovery again. But that's, again, what do I know? If I know, I'd be trading on the beach.
Yeah, but unfortunately or fortunately, it's not the fundamentals that matters these days, right? That it's liquidity driven, and I think we're going to continue seeing quite a bit of liquidity coming from all major central banks. But I agree with your assessment about the second wave. Is the second wave, third wave?
Yes, second, third.
Who's
One of
counting?
the waves. It's not the Elliott wave theory, that's for certain.
Oh, I like that. We should do a Elliott wave theory.
Maybe this is wave 3, which is going to go really, really, really long. So here you go. We got that. Yeah. So like I said, I think I think we're in agreement with that. Now, in 2021, I'm going to go ladies first again, Kaya. What assets will you be watching closely?
So my theory is that now that we have the stimulus bill approved in the US, that's about $1 trillion. US is going to start pretty large-scale fiscal stimulus. We also have a budget approved in general. So I think that we're going to start seeing a bit of inflation picking up faster than we expected. It's going to be higher than we expect, most likely as well. So I'm going to keep an eye on inflation, and I'm going to use Treasury inflation-protected securities. Bit of a mouthful, but it's TIPS, what it's called. And I'm going to see the performance of that, because that's directly market pricing in the risk of inflation. And there's also the break-even rate that is published by the US central bank again.
Perfect. And Riyadi, what will your choice of asset be in 2021?
I've been looking at the US currencies index, US index, US dollar index, which is currently has formed a good support at the 89.9 level. And I think the dollars or the greenbacks will have a gain backtrack soon in 2021.
Okay, perfect. And my final question, actually, I got a little special quiz in a minute, but my final question is, I guess we already know the answer, but all three of us, but what major challenges can you see the market facing next year? What are going to be the major challenges?
I think I answered pretty much already, saying it's probably the inflation that may flare up here and there. But I also think that we already see, and we continue to see, a lot of structural unemployment. Again, the same work from home theme is going to continue, which means that we need less people working in real estate, less people working in transportation. So I think the structural unemployment is going to be much higher, very high. Also, we see the NFP picking up again these last months. So I should rephrase that. NFP getting worse again. So I think we will continue seeing large people unemployed, which may trigger potentially some sort of civil unrest, unless the government step in and potentially give some sort of, free money, which they already do in a way. But
they've been sort of doing that since March, haven't they? Majority of governments have been trying to.
I haven't gotten any money. I don't know where's my check so far.
Yeah, well, you don't need it. You're a successful market guru. You're fine. You're okay. How about you, Riyadi? What do you see as the major challenges the market faces in 2021?
What I can see is, even though that we have the vaccine already rolling out throughout the whole world right now, but I think the number of cases of COVID will still be increasing in 2021. It is because of the COVID-19 is going to be there. It can be wiped up easily, even though that we have a vaccine available right now. But if you can see that not everybody is able to get the vaccines, especially in the poor countries, especially in African, or such as the Vietnam or somewhere around there. I think we're gonna face this problem, and it will continues in 2021.
I think you're spot on. Unfortunately, all the developed markets are hoarding the vaccine, right? So which means developing markets, emerging markets, frontier markets, for them, it's most likely going to be second half 2021 before they can get their hands on the vaccine. And also people such as ourselves, right? I think, not earlier than May or potentially April, then we're going to get the vaccine. So yeah, it's a good assessment. What about you, James? Tell us.
Again, like I say, I think it's obviously as already mentioned previously. I totally agree with you with inflation. By the way, I totally agree that's going to be a major obstacle for us. But yeah,
And,
it's
and on top of that, inflation, why it's going to be a problem is that we don't have the luxury of raising rates anymore because the world
you
is
can't.
in debt completely.
We can't do
I
it.
mean,
We can't. I know.
I've forgotten the percentage, how much. I'm sure I have it somewhere in my notes at the moment, but found it. Balance sheet sizes. Bank of Japan, 130% of GDP. Bank of Canada, 27% of GDP. The Fed, 33% of GDP. And ECB, 60% of GDP. So you raise the interest rates, let's say 25 basis points, your interest cost is going to be that much higher that no way any country can sustain that.
No, it's not feasible.
That's
Totally
not feasible. So either we let the inflation run, or we face the risk of having large-scale defaults on that.
And which will again mirror the credit crisis, which is exactly what we need right now during a global pandemic. Okay, okie dokie. Right, a little bit of fun stuff now, or a little game I like to play with you two. I've chosen 3 random assets. Okay, and the game is this. I want you to choose a price that asset will be, say, by May. Okay, by May. So the first asset I'm going to choose is gold. Kaya, where do you see it going by May?
I have the chart open in parallel, so I'm just gonna. I'm looking at my gold chart, looking at the weekly chart. We're talking about May here, right? So 4 months.
Month of May, so 4 months away.
My guess is gonna be. Are you gonna writing it down?
I'm writing it down.
1,865.00.
00. So $1,865 an ounce. 0.00. Yadi, a fellow gold buff like myself, where do you see the price?
I think the gold price will drop to 1,600.
1,600 and what, sorry?
Yeah.
Just 100. 1,600, yeah?
Yep.
James, you have to take a guess as well.
1,750. Anyway. No, this is a game for you two. I'm not. I'm the quizmaster. Okay, so that's gold. So we have 1,865 for Kaya, $1,600 an ounce for Riyadi. Okay, so I can.
I'm just going to add a comment here as well. A potential catalyst for gold to really go higher is again the same inflation.
Exactly. Yeah. So I'm bullish in gold. I feel we're going to see it touch the $2,000 mark again.
I think so too, but I don't think it's going to be by May, James. What do you think?
I think maybe a little bit before that, but we'll see. We'll see. So anyway, that's the goal. So we got it in. So that's booked in. I'm going to keep this on record. Next one, you've already mentioned euro dollar 2-year high. So Kaya, by May, where do you see the euro dollar?
Euro USD. So we're trading 2-year high right now. I think euro is going to benefit from the risk on trade, but I think by May it's going to come down, and my guess is going to be, let's see, 1.1880.
So 1.1880. Riyadi, my friend, what is your estimation?
All right, for Euro USD, I think it's gonna be going down as well because of first the US dollar. I think it's gonna gain track back again, and so the euro must come down for now. I think it's gonna be somewhere around 1.188.
So 1.18.
Yes,
1 point. It's already taken.
You got to guess a different number. There's no copying the numbers. This is a game. You got to challenge each other.
Great minds think alike, James.
Yeah, true.
1.18829.
Very specific.
Okay, I like that.
Extending your pitch.
It's more specific than your gold, 1600. But yeah, so okay, so all right, here we go. So this is the euro dollar for May. Kaya 1.1880, Riadi 1.18829. So we have it here booked in. I'm keeping this. Okay. Now, final asset I want us to look at. It's quite poignant because I think it's going to have a very fruitful, well, not fruitful, maybe very interesting year. And that is the cable, the British pound, US dollar. By May, Kaya, where do you think you'll be trading at?
So pound USD is going to be an interesting one because, again, trading 1.34970 at the moment. UK in the worst recession in 300 years, but I think the trade agreement with the EU was relatively good, but I think it's still going to come down. So my guess is going to be 1.3154.
Okay, brilliant. 1.3154. Riadi, what is your estimation for the cable by May?
I think the cable is going up to 1.40541. That is because of it has to find a good support on the long-term trend line on the weekly time frames and also moving averages for now. Yep.
Brilliant. Okay, so yeah, very different this time. I love it. I absolutely love it. So we have Kaya down at 1.3154 and Riadi at 1.4051. Very bullish estimation with the good old British pound, US dollar. So there you go. We have our three. So we'll do obviously a rehab come May. See who is the winner. The prize is gloating rights to say who was the best at guessing this. Remember, ladies and gentlemen, of course, this is a little bit of fun. Okay, this is no way whatsoever to be taken as advice. I always suggest to your own research and diligence and the risk of hand for entering trades. So remember, this is not advice. So there we go. That's 2020, 2021 on the horizon. Now, as we have, this is a special episode. I like to bring on camera someone I feel is sort of like the unsung hero, and that is our producer, Michael. Michael is the guy behind the scenes putting all the strings and putting everything together. Michael, say a big hello to everybody for me.
Hello, everyone. Hi. It's a real pleasure joining you on the panel for a change.
Yeah.
And a real pleasure actually working on these live broadcasts. Truth is that they've been very educational for myself. I have to admit that I'm thinking of picking up trading. So be careful.
Mike, we don't give any advice. Remember that. We don't give any advice.
But Michael is all behind the scenes producing these episodes. He is a real treasure to us. Me and Kaya, who work with him a lot. He's an absolute legend, and we're really grateful for everything he does. This is why I thought it'd be nice to say hello to the man behind the magic curtain. So, Michael, thanks again for everything you've done so far for the Primus Live episodes this year. It's we're really grateful. On that note, should we sign off? Start with Riadi, because I'd say, Riadi, have you got anything coming up next couple of weeks you want to mention? Anything exciting?
Oh yeah, on the day after tomorrow, on the 20, today is 29th. Oh, tomorrow I have a webinar event, which is I will cover a topic of candlestick, which is in Bahasa, in the Malay language. So if any of you from Malaysia watching this video, you may join us through our websites and register through the webinar session for tomorrow at 8 p.m. until 9 p.m. Malaysia time.
Brilliant. Well, Riadi, thank you so much for joining us today. I really appreciate everything you contributed, and we hope to do a lot more with you, which of course leads me to my very special co-host, Kaya. Anything you got coming up exciting to mention?
We have quite a few things coming up. So next Thursday, we're going to do another Primus Live. We're going to talk about recognizing patterns on charts. So that's going to be very intro type of session, I would say. Perhaps we'll do a continuation of that. And then we're planning to do something on candles as well at some point. But also on the 12th of January, I will be doing a webinar for FX Street. So those who are premium subscribers for FX Street, please feel free to join that one. But from my end, thank you everyone for joining for this session, but also throughout 2020. We've gotten so much positive feedback from everyone, and all the topics and the things we cover are coming directly from you. So please keep that feedback coming to us, and Happy New Year.
Absolutely, that's absolutely right. Totally, guys. Echoing on what Kaya was saying, these episodes wouldn't exist without you. We make them and produce them for you. So please keep the feedback coming in and sharing ideas and topics you'd like us to cover. But for me, a massive, massive thank you for everybody who's watched and supported us throughout 2020. I'm really excited for more to come in 2021. I know this is just the beginning. From myself, from Kaya, from Riyadi, and from Michael, a massive thank you again for everything. And remember, as I always say, these little episodes are for educational purposes only, and no way to be taken as advice. I always suggest you do your own due diligence and know the risks at hand before entering any trade. Till next year, and a Happy New Year for now. Till next year, every single one of you, trade safe.